Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Jujit Financial Services. And as I speak to all of you all this Monday morning at around about 10 o'clock, markets have given up the crucial levels that we all anticipated would be will be held out, was 22,800. In fact, last week itself on Friday, Nifty gave a marginal close below 22,800. But this morning, the selling pressure has got aggravated. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar, and crude oil. Sensex is down 710 points, and the level is 74,585. Nifty is down about 215 points. 22,580 is the level on Nifty spot. Bank Nifty is down about 550 points. 48,430 is the level on Bank Nifty or Nifty Bank. On Rupee Dollar and crude oil, marginal strength on the rupee, and the level is 86.65 rupees to a dollar, 0.047 paise strength on the rupee. And on the crude oil front, well, there's a downtick. $74.45 to a barrel is Brent, and $70.32 to a barrel is NYMEX. Expect NYMEX and Brent to trade lower with the kind of news flows that are evolving. And on the rupee dollar front, I think one can expect a little bit of strength going forward into this week on the rupee to the levels of 86.55 and 86.60 against the dollar. Now on the markets. Well, as I mentioned, Friday marginally closed below 22,800, and today a decisive breakdown. Which could lead to further lower levels, as we had discussed earlier weeks when we were able to hold out 22,800 on closing basis. The levels that one can watch out for on the lower side, 22,200 to 22,300 on the Nifty spot. On the higher side, well, initially taking off 22,500 and then of course 23,000 and 23,300. It's going to be a tall order. Sell side figures from the FIs have been on the lower side on some days. There have been buyers also. But to decisively say that they are done and dusted with their selling, I think it's a little bit too early. Picture will be clear. We'll have more clarity by this month end in terms of the sell side figures and numbers when we do the comparison of month on month numbers sell side for the FIs. And this week is going to be very, very crucial. On 26th, that is Wednesday, we have an holiday. Markets are closed on account of Mahashivratri. And the day following after that, 27th of Feb, that is a Thursday, that's the last day of the FNO expiry, monthly expiry. Expect choppiness and volatility to dominate the market for today, tomorrow, Thursday and Friday. Rollover figures will tell us a little bit of more detailed situation in terms of the rollovers carried on to the month of March. But the impact on the market, which is on the sell side, largely aggravated because, of course, the news flows from the US, President Trump, tariff most likely to be levied on autos, on pharma, on chemicals, and of course on a couple of other sectors is what he has spoken about. No clarity in terms of how much, but April, 2nd April, we'll have a lot more clarity. And during that time, of course, India is also trying to reduce certain tariffs on the incoming goods from the US to balance out the equation. But it remains to be seen how successful the situation is as we approach into the month of April. And more news flows, of course, from the US on the tariff front. India volatility index, India VIX, is up at 15, up about 3 odd percent. And this is also going to get elevated in the next couple of days because of the FNO expiry, monthly FNO expiry. So expect this choppiness and volatility to dominate the market. Earnings season have done and dusted. The large opinion on the street is that it was better than the estimates overall. Q3 earnings situation could evolve for better in the fourth quarter, but again, numbers will speak what the corporate India does for the last and the final fourth quarter this financial year. It is a challenging time for traders, short-term, medium-term traders. Very difficult to gauge the mood of the market. Last week and the week before that, we've seen markets move in both directions, uh, catching a lot of traders unaware, either on the long or the short side. We had maintained our stance in terms of short to medium term traders to try to maximize your profit by keeping lower expectation and not to get into a trap, because that would have led into a very unpleasant experience for short to medium term traders. Investors, well, it's a time to create a portfolio with wealth orientation. And in this kind of time, I think it is also prudent for investors, in case if they have certain stocks which are not contributing, especially from the broader markets, small cap universe, certain mid cap sectorial themes, if they are not contributing, then one can do a churning of the portfolio, um, come out from those underperforming stocks and look at investing into large cap. Whether there will be more pain in the small cap universe or mid cap universe, well, small cap, there could be a little bit of more pain, but mid cap sector really, you can definitely look at some investment themes. For example, IT is there, mid cap FMCG companies are there, mid cap cement companies are there. So these are the places where you can possibly look at investment ideas in the mid cap universe. But this is going to be a acid test in terms of finding a support at the lower level. Uh, Whether buying will come in and whether we are able to recoup from the morning losses either today or tomorrow or Thursday or Friday, that only time will tell. But since we have spoken about portfolio building, and we always share two investment ideas from a long term point of view on the fundamental side, two themes that we have identified this morning: one is defense, and the other one is gas distribution. From the defense universe, we have identified Cochin Shipyard. And we've also seen sell off in the defense related stock, not to forget they had run up also as much, and then followed by the profit booking. We've seen certain lower levels. Cochin Shipyard is the company that we have identified from the defense space. This company, based out of South India, from the state of Kerala, has a huge repair dry dock facility. They've also been able to get a decent order book in the recent times, and the commentary from the management in terms of execution of that order book is absolutely clear, which will translate into earnings as we go into the future earnings. Approximate targets that we have set aside for Cochin Shipyard is 1,560. These are approximate targets from a long term point of view on the fundamental side. The next company that we have identified from gas sector is Gujarat Gas. We've seen a tactical shift from ICE to gas related EVs, etc., etc. Industrial usage, other than domestic consumption, is also slowly and steadily picking up. Gas distribution outlets are also contributing to the consumption and sales side number at a higher level. Margins are something that keeps a little bit tricky because of the natural gas prices in the commodity market, but they have also been in a lower trajectory. Expect consumption to go up, and that will translate into top line numbers moving to an elevated level. And of course, operational efficiencies will bring in a profit margin expansion as well. Approximate targets on Gujarat Gas Limited is about 600. All these targets tend to get revised as the earnings unfold, but you can say that these are approximate targets on both Cochin Shipyard as well as Gujarat Gas. So I'll repeat the targets: 1,560 for Cochin Shipyard, long-term fundamental approximate targets, and on Gujarat Gas, the 600 rupees, again approximate target from a long-term point of view. We were used to higher double-digit return for almost about 2.5, 3 years plus kind of time horizon on Sensex and Nifty. Stock specific, sector specific, we got even better returns. And for the last couple of months, we are caught between the devil and the deep blue sea, consolidation, profit booking, and lower levels. Expect the markets to trade with the volatility. And as I mentioned, traders try to maximize your profit. Don't keep higher expectation. But for investors, it is time to churn your portfolio from underperformers to performers, and more likely look at large cap names where valuation is attractive. Thank you very much for your patience, Yuri. I'll see you again next week on Monday. Till then, please do take care of yourself. Bye bye.